What is up, YouTube? Welcome back to Stocks by the Numbers. Today is Tuesday the 28th. I wanted to do a very quick update on Bakkt Holdings here, ticker symbol BKKT as per request, listed here on the New York Stock Exchange. Company closed here today, $1.76 a share, down 4 cents, about 2.2% here. And this is the last time that we spoke about it, looking like about almost 6 months ago to the day. It was about June 4th, June 5th. Stock was at about $1.40. We had this flattening, the tightening in the Bollinger Bands that I spoke about. And I did mention the potential short interest. I know I was corrected. I mentioned multiple times throughout the video it was about 15%. Then people commented that it was over 20%. Either way, I said in my opinion, I still personally didn't understand the whole short squeeze behind the situation. However, I did mention, a potential inverted head and shoulders, but the company ended up dropping down here back to this $1.08 level, where it dropped here back in about mid-March, and then boom, we had the explosion up to 235. That made our next top here from going back to about mid-January. So that's the orange trend line that I drew out connecting those tops. As you can see, came very close to touching it here today. And then you can see the rejection and the absolute decimation of the stock going down to new lows of 64 cents a share. Now, I cannot take, obviously, massive credit for it. However, I did say at $1.40 that the stock could easily go back down to $1, sub $1. And I did say that, in my opinion, if I was going to take a position on the stock, I would wait for, like a 30% sell-off, just in my opinion. And then as we see, of course, it happened right before the stock exploded. But again, back to that $1.08 level, I did mention that, in my opinion, not only could we see $1.08, but you can probably see lower. But long story short, I did say to wait for a pullback. You did happen to get your pullback, then you got your explosion. So if anyone saw the video, or if you were involved with the stock here at like $1.30, 40, 50, and then you happen to catch this run up to 2+, I really hope that you took the money and ran. I do always preach that with the current administration, in my opinion, this is a trader's market. This is not really an investor's market. So when you have, especially a speculative smaller cap situation like this, if you're able to get in at a cheaper price and then all of a sudden the son of a gun explodes and you're up, 30, 40, 50%, you have to learn now. You should have learned in this environment that you have to get in and get out, because again, especially when we're dealing with a speculative, inconsistent revenue company like we were looking at, what you have to understand is that because they brought it up, see, if it was supposed to be up, that's what I always say, if it was supposed to be up, it would have maintained this value, right? And you had the immediate spike up, and then the next day it just immediately started cratering down, completely selling off for several months down to lows of 64 cents. Again, from 235 down to 64 cents. So this is why I say, especially with stocks like this, in my opinion, trader's market, you have to be in and then you have to be out. You buy the dips and then you sell the rips. And obviously on the inverse as well, if we see a company like this that we just saw rip up, that we had a feeling was going to go back down, then we basically inverse that on the put/short side, right? And what we do is we would wait for the pop and then we would time the drop. So that's why, you definitely could have made money on both sides of the fence there on something like BKKT. But of course, it's all hindsight, of course, but, I'm just trying to give you a couple of tips here. But recently, now you had the company, apparently they did that acquisition of Apex Crypto, I believe it was, and now, as of last quarter, revenue now jumped up, apparently, to north of $200 million for the quarter. Now, off that news, the stock went from lows of 64, bounced with some momentum going into these earnings, and then just absolutely exploded back up to $2, almost getting right near that trend line. But I can understand that it, has to take a couple of days off. We do have this long post here, and in my opinion, after having an explosion like this, you could have a consolidation channel. So we could potentially see a little bull flag happening before we potentially take the next leg higher. However, I know someone mentioned that it did get above long-term trend lines, and that's what this purple line is right here. If we go back to our high here of this rally, as you see, August 11th of 2022, connecting to the high of January 11th, 2023. And then, of course, that was the flash push So if we just extend that line through, you can see that's actually right where the stock basically began to bounce around, hesitate, and actually had its first red day as it fought to get above this longer term resistance trend line. And then you can see it pulled back and it actually closed below it. And now what happens the next day is we have a massive explosion and it breaks right through and goes even higher and hits $2 a share. So now I can appreciate the fact, I can understand that point that the stock is now on the technical side above a long-term resistance trend line. So that absolutely, hands down, is a very nice positive for BKKT. What we have to see now is where it goes from here. Because again, I can understand with the jump in revenue coming in, about 200 million, everyone's hyped. And, you know, listen, if you were able to position yourself maybe like sub-dollar, totally understandable. Because what blows my mind also is that if this news is so good, and supposedly the company is forecasting these huge increases in revenue moving forward, why would an institution like Rosenblatt come out and lower their price target to 170 from 210? This was on November 15th, right? Right after these numbers were posted. So I have to assume that they're looking at this big EPS miss here and the widening losses, as opposed to looking at the revenue. And that actually kind of threw me for a loop, because now you're saying instead of tens of millions coming in, you're going to have hundreds of millions, and maybe next year you may even be up to billions, but yet at the same time, you have a company like Rosenblatt come out and lower their price targets. Now, of course, you guys know how I feel about these analysts. Tale as old as time. Only two career paths that I have seen proven to get paid no matter what, even if they are dead wrong, and these are meteorologists and stock analysts. So these are the only people, they can tell you it's going to snow and then it's going to be 90 and sunny, the guy still gets paid. Again, Rosenblatt says it's going to $1.70, the stock could go up to $14, that guy's still going to get paid. So the only couple of industries that I can think of where you can just be completely wrong and still get paid and still have a job. But moreover, again, me, in my opinion, I would wait to see, number one, if this bull flag consolidation channel does take place, but also if we zoom in here, that's what I mean. You can also see that we kind of have, it does kind of look like we have this flagging consolidation actually tightens up, and it looks like, look at this right here, actually, right in front of your eyes. So now this purple is the long-term resistance trend line. Remember, that connected those tops going back from August of 2022 to January of 2023. And now you can see that we're actually forming a potential descending wedge, right? In the long term, again, this is more of a prediction than what we're seeing, but I was predicting that the stock would consolidate into a bull flag and then take the next leg higher. However, zooming in now, we could have potentially a little bit of a different story. So now what we could potentially see is, as you see, Thursday, 10:30 maybe, that is basically like the apex as we see here. Early morning, potential midday of Thursday, right? Today's Tuesday. So what we could potentially see is really a couple of things. So first of all, it did not touch, hold on, I know I'm talking about like 4 different things here, just stay with me. It did not technically touch this top trend line, backing out again. This is connecting the tops of January 12th, 2023 to the top of July 14th, 2023. So if we zoom back in, we can see again, it technically, did not hit that top. So of course it could still bounce and hit that top, looking like, yeah, maybe about like 203. And as we see here, since reporting these numbers, the stock has been trying to retest the moving average, but bouncing off of it consistently now for about 2 weeks. So now with the stock closing right here, literally at the moving average, tomorrow is going to tell us, in my opinion, what kind of pattern and technicals may be setting up here. Okay, so what I mean by that is, if it bounces off of the moving average like it's been doing, then in my opinion, it should obviously pause right there at the fib of 185, But then technically, it really should get back up to that slightly over 2 and try to test this trend line. And then, of course, it may reject because it just ran like 150% in the last 2 weeks. Or on the flip side, we could see our first rejection off of the moving average, and this stock could drop down red a couple of cents tomorrow. And what that would potentially tell us is, again, going back to our long-term resistance line, and that would bring us down, and it could potentially show us that we are in this descending wedge, which of course is still bullish. However, again, the stock just ran like an animal. So that's, you can't just expect these things to just cumulatively climb, 5, 10, 20% every day, day after day for you, right? They have to sell off. There are people taking profits. People see these run-ups, right? They may be starting to bet against the stock now. So remember, not everyone thinks the way you do. And again, not saying that you're wrong. However, if I see a rejection here, but we stay in this range, again, it's looking like that, actually. So that's what I mean. If we stay in this range, just look at that perfect timing. This is what I mean when I talk about the potential perfect storms, right? We have a good regain above long-term resistance. The stock has held this now for the last 2 days, and of course, if we drop down, not only will we still be above the resistance line, but we'll be in this wedge, and the apex meets up basically Thursday, late morning, as you see here, looking like around 11 o'clock. That's where the apex is going to hit, as the stock potentially could sell off and get ready to bounce off of that resistance that it just broke through. And then what the hell's going to happen? Well, in my opinion, obviously this is bullish, and it's probably going to pop back up to the 180s and potentially retest that line of 2. However, with staying above this moving average for a while, this is why I'm saying it seems like there's still a lot of bullish momentum behind it. So even if it breaks that moving average, it really looks like it's going to potentially break through this trend line. It really does. It really does. And that's why I was so taken back by this price target downgrade here. But you can also see at the bottom of your screen, look at the difference in volume that has been coming into the stock. I know it's hard to tell because the lines get smaller, but again, look, you had some spikes, of course, over the last couple of months, but from the last time we looked, excuse me, from the last time we looked, the bigger volume came in here as the stock was chunking down and hitting new lows, right? Everyone's jumping ship. Then we had the massive rally throughout July, and you can see that that's when the stock broke out, probably hit that double bottom at 108 we were talking about, and then had the explosion up to 2 and change. And then you can see that's where the big volume came in, right? Because the stock broke out, gained that bullish momentum, so then everyone and their brother jumped in to ride the wave, while simultaneously anyone who got in here probably sold here. So that's why you kind of had red and green volume coming in. And now if we fast forward, you can see, look at the increase in volume here coming into this stock. And that is because, in my opinion, because of this revenue that the company now posted. Now we went from struggling to post 10, 12, 14 million, or whatever the hell the numbers were prior. Now the company, again, comes in with 200 million. But what scares me also, again, I know last time we spoke about it, I compared it talking about Robinhood, right? Because it's kind of the same thing. It's an online trading platform, and they supposedly earn, a little commission fee from each trade. But we were looking at Robinhood, and in my opinion, I felt that the stock was overvalued, looking at the revenue they brought in compared with the current market capitalization. And of course, on top of it, the company is bleeding like crazy. And I basically said that, simple logic and common sense thinking, that you have a company already established in the space, generating hundreds of millions and over $1 billion in annual revenue, and yet the stock, isn't really exploding. They're still struggling to beat earnings, beat estimates. Revenue still actually seems kind of inconsistent and shaky. And my point basically was, if they're struggling to get it right, why do we think Bakkt could potentially get it right? Of course, it's, even though it's been 5-6 months, it's still too early to tell. Market cap right now up to 480 million, we'll call it. the EPS has gone up. I remember, I think it was like they were losing like $7 a share or something. Now the EPS is sitting at minus $1.77. Look at that beta though. That's incredible. Beta 4.21, which basically means it's 4 times as volatile as the overall market. But switching here, you can see the jump in revenue, right? And the quarter before, they're saying they brought in 347 million, even though TradingView showing us 13. But also, again, like if that was the jumping off point, how did we go from 347 million down to 204 million? And also, with bringing in that much money, the company still was net income negative. So I don't even know, honestly, if those numbers are real. But of course, if we pull up these news articles, it says that they came out and reported those numbers. So honestly, I really can't give you a straightforward answer right there. Uh, ba, ba, ba. There was. See, this threw me for a loop also, because I have a feeling that's why Rosenblatt lowered their price target, was because of that big EPS miss, right? But then also at the same time, this is what I mean, you have positive headlines like this. Bakkt Holdings expects to be about break even on adjusted EBITDA basis by end of 2024, right? By end of 2024. And if we look at the forecast, I believe they weren't expecting EPS positivity until 2025. So that's what I mean. If they're trying to kind of say that they see that they could be like a quarter or two early ahead of schedule, obviously that is a very big positive. Revenue comes in, 204 million, right? And now you see something like this. See, fiscal year 24 crypto cost 3.386 billion to 8.976 billion, right? And now we look and we see fiscal year 24 revenue 3.461 billion to 9.071 billion. Well, first of all, obviously these are just projections. We have to keep that in mind. And the company just posted a couple hundred million. So now you're telling me you're expecting the low end revenue here to eventually grow to about 10 times the number that you just posted. So, well, no, I'm sorry. They just posted 200 million, right? So you're talking like 15 times, 17 times. So only time will tell. And again, that's the low range, right? They're saying they can see as much as over 9 billion in revenue fiscal year 24. So only time will tell. The good thing is that the revenue supposedly is slightly outpacing the costs. However, this is what bothers me about these platforms. See, this is why, like I don't know how to explain it. Like, I don't know, the cryptocurrencies, like I appreciate the value in them, but also at the same time, you would think there would really only be a handful of coins, not like thousands of these cryptocurrencies. So that's why it brings me back to kind of like my simple old school logical thinking that all of these can't work out well, right? They all can't be the next Bitcoin, and they're all not going to grow like crazy. But also at the same time, again, even looking at a stock like Robinhood with the revenue that they brought in, if we go back, it goes back to my original point, because they saw the spike in revenue in 2021. But if you recall, that's when they gave everyone free money. And all of these young people immediately put it into cryptos, they put it into stocks, and that's why you had like your fuel cells and your other crappy stocks that you guys were looking at, and that all exploded and went from $2 to $78 or whatever the hell, and now they've been selling off for the last 3 years straight. Like, this is what I mean. If Robinhood was really a kick-ass platform, and of course on top of it, you need people to consistently make returns, because the more money that people are making, the more they're trading, which means the more commissions that you're making. So that has to tell me that if a stock like Robinhood saw a drop in revenue from 2021 to 2022, I have to believe that the bulk of people on the platform have lost money in their stocks and their cryptos, and they're trading less, which translates to fewer commission dollars for Robinhood, which is why revenue went down when it should have definitely gone up. because, again, you're making money off of each trade on these investment platforms. So all you need is the word to spread and your footprint to grow and more people to open accounts and use your platform, and you should consistently have increases in revenue. And if you think I'm talking crazy, go look at Interactive Brokers. People want to know why that stock exploded. Well, it's because the revenue kept going up and up like clockwork. But see, again, this is what blows my mind, because you would think that the reaction that you would have in stock price, I'm talking, would be absolutely astronomical. And again, it may be too early to tell. It may just be too early to tell if what we're seeing is going to be short-lived and, we hit the line and then just drop back and sell off. Or if, again, we have a potential bullish technical setting up and then we have to... This is our mark, right? That's the point I'm trying to make. This is the mark that you have to watch. If you get above that mark here, then you'll probably go back to that high there of 235 and potentially even keep going towards $3 and even more. And this is what I'm saying. If we're really going to basically take them at their word, then technically the stock should be higher, right? But also on the flip side, only time will tell. And again, to bring up Robinhood, I'm sure a lot of people thought that year over year revenue would go up, and then they saw a drop in revenue year over year. So that's what I mean. Nothing is guaranteed. And even the company giving that kind of massive range actually scares the crap out of me as well, right? And this, again, is what bothers me about the crypto space. How can you have a range like this? This is a 150% range almost, 130% range here. 3.386 billion to 8.97 billion. Well, those are just the costs, but still, even looking at the revenue, 346 to 9.071 billion. That's some freaking range, man. Telling investors, oh, we're going to do anywhere from 3 to 9 billion in revenue. So what that leads me to believe is that the entire crypto space is unpredictable. And that's why, again, 346 billion to 907. I mean, we can fast forward and all of a sudden the company brought in like 1.1 billion. And granted, it's much more than it is now. And the stock would probably go higher over time. However, just to throw out a range like that, I don't know. In my opinion, it doesn't really add up. But again, only time will tell. Right now, everyone's feeding off of the technicals because, in my opinion, some of the fundamentals are still kind of rough. We looked at this last time. Let's switch over quarterly here. And we can see that going into 23, debt was about 37 million, jumped up about 15%. Now it's holding at about 43 million. The company does have assets outweighing liabilities, definitely a good sign. Cash and cash equivalents consistently decreased, was 176, slowly started to come down as of last quarter, sub 100 million. With the free cash flow, though, going positive, closing at about 22.75 million. Right, so the cash flow went positive. But I wanted to show you guys this as well, because we can see that the assets did make a comeback a little bit in the last 2 quarters. And they jumped up again, basically double from where they were, a couple of quarters before, from the last time we looked at it. But as we see here, assets 846 million. But look at the jump up in liabilities as well, going up to 635 million. Now, granted, it's a little lower than it was last quarter, but again, assets minus liability yield to equity, right? And I told you, the higher the equity goes in the company, the higher the book value per share goes. And as you see, quarter over quarter, equity has actually slowly been dropping down recently, even chunking down in the last 4 quarters. And you can see, look at the book value per share, basically falling off the cliff, now sub $1 and now 76 cents. So that's probably why your stock crashed to 64 cents and hit new lows. I do like the jump in revenue. However, again, somehow with them bringing in tens of millions, it only cost a couple of million. But now with them bringing in hundreds of millions, it costs more than what they're bringing in for their service. So that's what I'm saying. I'm seeing some positives, but I'm also seeing some negatives. And I mean, from a fundamental standpoint, in my opinion, I think it's still too early to call, even though we are seeing this bump up in revenue here. But on the technical side, you could potentially see a little bit of a bull run. Again, in my opinion, I'd be watching that key trend line that I pointed out. However, we can see now a situation like this. Gross profit now, just in the last 2 quarters, has now gone negative. Was sitting positive a couple of million, again, before that. But revenue minus cost of goods sold yields gross profit. And that's what I'm talking about. Now, the gross profit has turned negative. So this is why, again, even though there are positives like chunks in revenue, there are negatives like the drops in gross profit. And that's why, again, I can see people still being bearish on the situation, and even some of these institutions coming out and lowering their price target. However, I will say, look at the operating expenses, completely jumped in the opposite direction, was minus 40, 50 million. Now it's minus 16, minus 18 million. Gross profit minus operating expenses yields operating income. And you can see the operating income has now slowly been trying to climb up. Still sitting at negative 30 million, but it's slowly starting to climb up. And this is why I'm saying, again, the company definitely has some positives, but of course, they're still holding some negatives. And that's why I just feel like it's a sticky situation. And you know me, like I always say, I'd rather miss out on a bottom and let it rally a little bit, proving to us that good revenue, steady, stable revenue is now coming in, and, you know, we have a solid company to invest into and buying it at a higher price, as opposed to rolling the dice here at $1.76 and, you know, then it drops down to 140 again, and by the time the company posts earnings, all of a sudden now they miss and the stock goes back down to like $1.05 or some, you know what I'm saying? So you're better off just waiting for that stability, in my opinion. Stock is sitting here 0.28 times sales, not the lowest. It's, well, yeah, we'll look at last quarter, actually, not current. So price to sales currently sitting at 0.18, technically the lowest it's been going back these last 6-7 quarters. Price to book has now jumped up to north of 1.5. And that's what I mean. Currently, it's sitting at 2.37, right? Because we said book value was like 76 cents. Enterprise value is surprisingly higher than the current market capitalization. And this is why, again, I have to preach, because when you want to take a position, in my opinion, you should be running through all of this information, all of this data. And if you are going to go long or buy or own shares or calls of a stock, in my opinion, you should make sure all of this information has been checked. But more importantly, if you're going long, then the positives have to outweigh the negatives. And if it's like 50-50, neck and neck, then in my opinion, that should tell you that perhaps it is not time yet to buy. The return on assets was only minus 13%, obviously fell off a cliff and has slowly been trying to climb out, now less than minus 17%. The return on equity also slowly climbing up, even though it's still pretty negative, and the return on invested capital slowly climbing up as well. We saw the gross margin percentage go negative. We looked at that before. The operating margin, again, was improving for the last couple of quarters, still sitting at minus 14.75%. EBITDA got much better, still sitting at about minus 12.5%, not the lowest it's been. And the net margin percentage almost, well, it didn't really double down, but went from a little less than minus 5%, now sitting at minus 8.5% roughly. But I will say certain things, see, like the asset turnover jumped up to 0.67, was much, much lower than that. So again, the company does have some positives, but I don't know, man. In my opinion, I'm just not seeing it. And again, now these numbers have to be updated, these forecast numbers, but they haven't yet. But supposedly, like, that closing with Apex Crypto went through already, and now the company's generating hundreds of millions. But supposedly, that's what I mean. Even that for that quarter, like, estimates didn't move, estimates didn't change, and we kept it at 16 million, but the company brings in 200 million. So that's why it's just kind of throwing me for a loop right now. And I don't know. I don't know. It's just not adding up. It's just not adding up. And supposedly, again, it looks like the EPS losses start to narrow, but then, of course, turn towards the end of 24. And for 24, they're expecting a loss of 24 cents. I mean, good improvement from what we're looking for 2023. But again, looking to go EPS positive in 25. I know the company trying to hype everyone up, forecasting 2024 instead of 25. So again, we'll see. Only time will tell. But again, look, like, none of these numbers were adjusted, and that's what I mean. That's why right now, situations like this, me personally, I wouldn't just blindly make an investment or make a buy. I really wouldn't. But again, we're talking about an investment, right? Because I know you guys are very bullish on this, talking about this whole one world currency, and apparently this is going to be like the only platform that does it or something. That's why, supposedly, what I'm hearing from you guys. So I just don't understand that at all. That's what I'm saying. That's what I'm saying. If there are all these crypto trading platforms out there, if we do get a one world currency, why would they only have it so that you can buy it and trade it through Bakkt Holdings? Just doesn't make sense. But again, on the technical side, we have our potential wedge. We have our potential bounce off the moving average. We also have our potential bounce off the long-term resistance that we recently got above. And then, of course, we have the next resistance line to keep an eye on. So that's why, again, on the technical side, you could have something setting up. On the fundamental side, in my opinion, still kind of wishy-washy, random ad. RSI got above 70, of course, after the pump, still holding 70. So, of course, could go higher again, but really shouldn't, in my opinion. The MACD has been climbing, obviously, and jumped up and chunked up since the earnings report there a couple weeks ago. Switching over here to the weekly, we can see RSI sitting at about 59 1/3, so definitely still has more room to go. And the top Bollinger Band on the weekly, 185, and the stock hit 2, but you can see that it opened, see where it opened right there at 184, so that's why, again, I like to watch the Bollinger Bands, because sometimes these levels that the stocks stop at, close at, or open at don't make sense, but of course when you pull up specific technicals, then all of a sudden it all lines up. MACD looks like it crossed to the upside and could potentially be curling and flattening out, so we could again have a pullback to 141. But I also wanted to show on the daily, see this moving average here, 200-day of 136. And if we switch over here, right, we can see how we chunked up. And you can see, look, 136 right there. Right there at the base of that candle, right where it opened this time last week. So the next level, of course, is going to be like this 158, 156 level here to see if we spike up and then begin to spike and chunk back down. Almost similar to what we saw a move with POW, POWW recently. We had a big chunk spike up like this, and then it just started to kind of close the gap and chunk back down. So that's why we could see a drop down to about the mid 150s. And then you could potentially see the pullback to the 200-day on the daily of 136. But right here, again, these are your marks to watch. I'll zoom out again a little bit for you. We have the purple line back from the top of this range here, August 10th, going to January 12th, and cutting through to where we were just about a week ago. And you can see that we've gotten above that line, so we're gaining some bullish momentum here. And then again, going back from those highs of January 12th, connecting to the highs during the summer of July 14th, and you can see that we are just a few cents away. Well, it's kind of hard to tell here, but you can see that we're just a handful of cents away from retesting that potential long-term resistance line and seeing if we could pop through it. So next couple of days are going to be key, especially if this wedge does line up, but only time will tell. But that's enough. I talked too much. I'll end it there. Once again, Stocks About the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. I'll do videos and whatever I can to try to help you guys out. All I ask, just do me one favor. Push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you in the next one.